Hey, is this better now, Zarice? Can you hear me? All right, perfect. Well, welcome. So I put in the chat one of the forms, and then a lot of this is going to give you guys opportunity to where you can ask questions that maybe you haven't had a chance to ask before, or you have a buyer who is in a certain situation that you want to know if anyone can help them, or if you just want the basics of what it takes to build a strong credit score, and how to bounce back from poor life decisions or just life happening in general. But Adam and I used to work at a credit union, and like we had to do essentially credit repair. But I also have learned a lot over the years on knowing what it takes to help repair someone's credit, look at something to see what it's missing, understanding the codes on if it's trending up or trending down, those sorts of things. So that's what we're going to kind of go over today. And then if you have questions, again, just interrupt and we'll get it figured out. And so on the Zoom, if you do have a question or need to chime in about something, because I'm not going to keep looking down, just unmute yourself and ask away. Let me make sure my volume is, all right, it's all the way up. You want one of these? Yeah. So outside of the fact that you needed to do life here in America, does anyone know exactly what credit is? No? Fine. All right, let's just, let's not all go at once here. Um, not, yeah, like that is fair. It also is, it was explained to me as a kid that it's basically like when you grow up, it basically determines on like the trajectory of your life to some extent. It also is a little bit of depending on how much credit you have. You can also look at it as like your life insurance that you get to play with. And so whether that's revolving credit or just open lines of credit, or even if it's like, secured loans, unsecured loans, how well can you take care of it? What can it do for you? What are you doing with it? Sort of a thing. The document that's in there, it basically building a strong foundation. Some people say that you need at least 3 trade lines for a loan purpose. There are certain loan programs that do automatically require the 3 trade lines. However, realistically, you need 4. So you ideally want to have 2 credit cards, an unsecured loan, and a secured loan. That's what you need. As long as you take care of them, they will take care of you. It's kind of like you scratch my back, I scratch yours. And that's how it really works. Where you get tricky is that if you keep taking out credit, but you don't have the income to match it, over a certain period of time, the credit actually catches up and it recognizes it. So then your relationship isn't as strong and it's not as equitable because you have exceeded your life ability to be able to take care of these things, or it's going to notice that like if when you're making minimum payments and or if you've missed payments that like you can't manage this, and so that's where it starts dinging you. But it doesn't mean that you can't turn it around, and it doesn't mean that you can't essentially bounce back from it. So if you, let's see, for an unsecured loan, that is your personal loans, payday loans. If you have, like Discover is really big on this right now, and so is Citibank, to where like they help you consolidate debt. Like those are all personal loans. That's all fine and dandy to have those, but you can't take a personal loan and then also go back and max out your credit cards. You're not helping yourself. So a lot of times what we see when we pull someone's credit is the good, the bad, the in between, the ugly. But if someone is saying like, hey, I'm brand new to this, they didn't teach me this in school, my parents don't know, what should I do? I would tell them to do a few different things. Depending on how much money they make and how long they've been at their jobs, I would say you open up a credit card with your bank. And if your bank won't give you one, you open up an account with a credit union, get your like direct deposit deposited there for 6 months. They typically will go ahead and give you either some sort of a small personal loan or a credit card, or they'll do both. That's how you can kind of get started if you're brand new to it and you have no clue. From there, that checks 2 boxes off. If you need a third line and you don't need a car loan or anything like that, and you're not going to school and you don't want to take out a student loan to have another unsecured debt, then that's where you would go to like a larger credit card company to inquire about another credit card. But those 2 accounts should at least be on your report to give some sort of history for at least a good 180 days, because that is going to tell them how well can this person handle this. So 6-month timeline. So from the time you started, you really need a full year to establish some sort of a foundation. We've seen situations for like a mortgage, which is different because it is a secured debt, same way with a car loan. If you have a credit card and a personal loan and you've only had them for a few months, and if it's generating scores and if the scores are positive, you can buy what it is that you're after. Just because you started later or didn't know exactly what you were doing doesn't mean that you can't do what you're trying to do a little bit sooner. But for someone who has time, that's how I would tell them to start. You can strengthen your credit by just basically mixing those around. And does anyone have any questions about mixing or inquiries or anything like that at the moment? No? Okay. So here's another thing, is that if you have kids, I can tell you what I do for my kids. Both of my kids are authorized users on 2 credit cards of mine. Well, one of mine, one of my wife's, but they are 3 and 7. I did this when they were probably a week old. But it gives them a head start in life. Just like both of my kids work for my wife's business, and we pay them, and it goes into basically, investment accounts, but we're setting them up for success. Yeah.
So going with that, one thing I was curious, if you put your kids in as authorized users, and let's just say you guys later cancel that credit card, does that delete their credit history for longevity? And does that hurt them at that time, or?
It can hurt them, especially if they're not old enough to, let's just say here, if we cancel it, we close the account out for whatever reason. And which I've had to do for my son but it was okay because he's had 2 cards that he's on. But we did notice a difference from when we close out the first one, because it didn't used to have an annual fee on it, and what we were getting in points, it didn't make sense. So it dinged him now, but then he got added to a different one and he was able to bounce back. But because he's only listed on there as authorized user, he's also not technically actively using the credit. It dinged him 150 points. But both of my kids right now, they basically have perfect credit scores for these reasons. So then that way, if they choose to go to college, whatever they choose to do, when they turn 18, they would be able to do whatever it is that they would want to do because they have the history. And the only reason why I did it is because my parents didn't do it for me until I was 15. I had to have a job, but I was able to use the card, and I just had to pay it off when I got paid. So that's how I was taught to use it. But we did basically, our lives were different until I was in high school. And so because of that, that's just the only time that my mom was able to do it. But you can do certain things like that as an adult. If you get added as an authorized user, it does not help you as quickly. Sometimes it might take 3 months, sometimes it can take 6 to 7 months. And especially if you don't have anything else positive on your credit. So that's why it's the earlier you start it, the better. My 2 cents on it, and I can see it on a monthly basis by checking their scores. And they're 3 and 7. So you can do that. Another thing is that, like, as an authorized user, it is only helpful to be an authorized user on an account that person has really, really good credit. Like, you don't want it to where, like, if they use the card, or if like the card is 50% like utilization, anything like that, for an adult, it doesn't help them as much as it should be helping them. So you want someone who does pay off their account every single month, or even if they keep like a small balance, that is helpful. You just, most of the time when we see them, it's because someone is trying to buy a house and they're like, well, my mom, dad, brother, sister can add us, but by adding us, that person isn't always the best person to call to get added to the account. And whether they've missed a payment previously or anything like that, it's not going to help their score. It actually can drive it down. But then when it comes down to having a co-signer on like a loan, that's all fine and dandy. That will help them. And usually, especially like if it's at a credit union, that other person's credit is going to help them get what they need, but also it will help determine their interest rate. Mortgages, it doesn't work that way, but like on car loans, personal loans, it does help them. So you want to, all of your score factors should always be driving up. And if you are someone who checks your credit faithfully, and if you feel like it's bouncing around, 9 times out of 10, it's bouncing around either because of recent inquiries or because of fluctuation in credit card balances. Or if you have like newer debt that it hasn't had enough time to see payment history, you're going to see it jump. But if it is, we'll say July, your scores were 727, 751, and an 803, but then August, they're showing that they're all 20 to 30 points less than that. And if you didn't do anything other than maybe use some credit cards, it's because of the utilization. Credit cards truly do give your scores roughly 100 points over. So if you have $1,000 credit limit, then if you put $500 on it, you're losing 50 points. Just using that for a realistic number and easy math purposes, but that's how you have to look at it. And if you have late payments, that's also going to hurt it. Just for credit card sake, it is the easiest thing to help you build. Like, I can't stress it enough. So if you have borrowers, family members, yourselves, whatever, and they're just like, how do I quickly build strong enough credit to where I can go and get other things? You want a credit card. And if you can at least have 2 credit cards, it's even better, because it's going to fluctuate. But also, like, Capital One is a great one that they base it upon your income. If you apply for a credit card today, they approve you for $2,000. If you use that and you pay it off every single month for 6 months, they will either double or triple your credit limit. And sometimes they will improve the type of card that you have. But that's what a lot of younger people should be using if they know that, like, they're determined to build great credit, but also like if they're on a mission to buy a car, buy a house, those sorts of things. We can also look at addressing collections and how that affects your scores, unless anyone has any questions about anything. Yes.
I'm a new realtor and I have a client and they have no credit score right now.
What should you do?
So can we help them get qualified now? And if not, how soon can my client get qualified?
Adam is asking this question because he gets at least a buyer like this, we'll call it once every 3 months. So 2 factors here. Number one is we do not have an in-house product for no scores. However, if they do have a ton of money or a decent down payment, then the option for them to buy is possibly a yes. And, or I would say, if they only want to do this by themselves, I would sit down with them, have a conversation and say, hey, like, okay, where are you doing your banking? How much money do you have in savings? What does a realistic plan or path look like for you? And so does that mean that you need to go to a credit union and or have them go to a credit union, open up an account with them? If they have some sort of savings, they can do what's called a secured loan, where they are borrowing against their own money, but it also helps build credit. And then I would also tell them to apply for a credit card. Easiest places, if you don't have anything negative on your credit, is Credit One and Capital One. They will give you a credit card. Sometimes more, probably before a credit union will, but those are the two quickest ways. You can help that person within, we'll call it 3 to 4 months, if they did exactly what you tell them to do today.
Great, thank you, Chris.
Yes.
Buyers that will be like, I have huge school loans, I don't even know if I'll get approved. Does school loans affect, if I can get approved or not? A lot of people ask about student loan debt.
Yeah, I actually just got a call today for a Harold Collins. I'm not Harold, don't know a Harold Collins, but they were just like, hey, you owe this much money on your student loans. Well, not Harold, so don't call me anymore. But that doesn't mean that it's the end of the road for them. For it really just depends on the loan type. But if they have a good payment history, or even if they've never made a payment, but they've kept them in forbearance or anything like that, or like even on an income driven repayment plan and it's zero, that is helpful to them, because then it's not hurting their credit. It's not really helping it, but it's not hurting it. Okay. So if that is the case, let's just say here, we'll just use me for an example. My current student loan debt is, I want to say 52,000. Yeah, I mean, I have 4 degrees. It started off at 90 something, and I've just been able to tackle it in a healthy way that doesn't give me too many gray hairs. But yeah, I mean, like when you go back to school to get your master's, that'll just really drive it home. And I don't use them, so thanks, Mike. But in that case, when I went to, like, we'll just say when I applied for my mortgage on my house, what they did is at the time they had to use 1% of the balance. So that payment at the time, which was 4 years ago, probably was like 70 some $1,000. So they were using, we'll just call it $760,000 added in as a liability. Nowadays, you can either use income driven repayment plan, or they use 0.5%, depending on what makes the most sense for you. So like, if that were the case, then like, are they putting in zero, or are they able to put in, we'll call it 300 and something, to calculate a payment? It can affect their buying power, but it doesn't make it impossible for them to buy. So if, even like my best friend, she is a psychiatrist and she refuses to buy a home because she has a doctorate degree and all sorts of things. And her student loan balances are like over 200 grand. And she refuses to buy a house because she's going to work for a hospital for 10 years and then they're just going to forgive it. And I'm like, that's just a long time to also pay in rent, but it's what she's choosing to do and you can't convince her to do anything else, but that's a lot of money. So it doesn't knock her out, but there's also like doctor programs to where they don't care. Like they can have $400,000 in student loan debt and it's still doable. So tell them, like, don't let them think that they can't buy just because of student loans.
Yeah.
Anything else?
I got this other client, so she has rough credit, very less than for probably around 500. But her dad will co-sign for her, and he's got a perfect 800 credit score. Can we get her qualified?
Yeah, you can, but on an FHA loan with 10% down and 6 months of reserves. And their debt to income ratio in that scenario probably shouldn't go above a 51%.
Wow, thanks, Chris.
Oh, you're welcome. That's nothing newer than an email that I get from you every single day. Go.
Student loans, I have like a couple people who were completely stopped in their home buying journey because of student loans. Because of like the new, I don't even know. They brought, like, they thought that their student loans were gonna get forgiven. So they didn't pay on them, and then they didn't pay, then they didn't pay, then they had a 90-day late. And now their credit is tanked. Like, what does building up their credit?
So do they think that they, like, it was like under the CARES Act and whatnot, so like, do they think that they can resolve it, or they know for sure that they're not gonna be forgiven?
I don't think they're gonna be forgiven.
So in that scenario, what I would tell them to do is get set up on a realistic payment plan. They make you go through a budget and all these things, whatever. At the end of the day, like, they're using the similar income calculation that we do. They're going to go off of their gross income, but that doesn't get to take into account, like, off of their budget. They don't know how much their utilities are. They're not submitting that. They don't ask them how much their childcare is fully. They like to know an idea of it, but they don't accept the bill to confirm it. They don't know, like, other debts and responsibilities that they have. So I would tell them to plead their case until they can't anymore, to make sure that the monthly payment is realistic. And if they pay on that for at least 6 months, then it should start basically turning things around. But they can also combat that if they have credit card debt and pay that down, because that's also going to help boost their score. And as long as they're not missing payments on anything else, they should be fine, because paying down any credit card debt, at least a good healthy 6 months worth of on-time payments, it's going to start to trend back up. And the only way that they can get around that is that they can dispute it based upon information that they received saying that, hey, this was going to be forgiven. But if they never received anything and they just made an assumption because of what was happening in the world and they can't document it, then they don't have a dog in the fight. But doing the 6 months, healthy payments, all of that will help them. And when it comes around to it, most people, when they say like their scores are tanked, did they go from a 690, now they're at a 582? That's what usually happens. And so, like, it doesn't mean that their home buying options are over, but it does determine on what can be done, because of if they can't get an approved eligible through our automated underwriting system, then you have to be a manual underwrite, and a student loan late payment, at least if you have 2 of them within the last 12 months, that's going to negatively impact them.
Yeah.
So that's how you have to look at it. Anything else right now? Okay. So collection accounts. Here's my rule on collections. If it is affordable to you, figure out a way to pay it. Bottom line. But then if you pay it, you hold the cards. They want your money. So pay them, but also ask if they are willing to remove it from your credit. And because then at that point, it will appear as if it was never there, and it will give you whatever you lost back in points. But if not, I don't care if you pay it off in full, you make a settlement on it, you just want to receive the right documentation. I can transparently say that I have a client right now who paid an account off in May, and according to the creditor, like, we were trying to do a rapid rescore, they will not send him anything, not even a receipt. And so because it's on there, and he had previously disputed the debt because he didn't agree with it, but he paid it off, I can't approve him for his loan. And so because I can't approve him for his loan, like, that sucks. Because they said that it can take them up to a year to do anything. But like, he has called every single day to see if they change their mind. But like, and those are rare situations. But overall, collections, if they're within the last 18 months, they're going to hurt your scores. And if you can avoid them, obviously avoid them, but paying them off as quickly as possible. And if it shows a zero balance, your score will bounce back to some extent, but if it is removed, it'll bounce back even more. So medical collections, we don't really care on the mortgage side. We just don't. But if it's anything that's non-medical, then yes, we do. But sometimes what people make the mistake of is they try to get set up on payment plans with collections. That is a no-no. It's a big no-no. And the reason why is because every single time they make a payment, it's now reporting as if it is like an installment loan or a revolving line. So every single time they make that payment, it's going to update the balance on the credit report instead of being able to have it updated at once. So if they make an agreement today, and let's just say here, they're like, hey, I can have this paid off in 2 months. Well, tell them to do like the envelope method or whatever, set the money aside, call back, ask for the same deal, and then pay it. That's how they should do it. They should not make 2 payments, 3 payments, just make 1 payment. So that way it only updates and reports 1 more time. And that helps them the most. Yes.
For someone who's not really dealt with collections, what is the envelope method?
Envelope method is like, it's a saving method. So like if you have, it's $300, that's what they're willing to take. And if you said that you could have it paid off, we'll say by October 1st, we're going to say ABC Collections. How much money can I put into this envelope and from now until October 1st to get to my $300? And then on October 1st, I can put that money in my bank account, call them and say, that's what I can pay you. And it is only paid once. That's how I look at that. Well, yes, they are supposed to alert you if you have accounts and collections. They would mail you, like send you mail, they will blow your phone up. And they want to make sure that they get paid, because for a collection, it means that the debt was originally with it. Most people have medical collections. They don't have a ton of other collections, but like, let's just say here you have a medical collection with Altman Hospital and it's $1,000. Altman, before they send it, they are going to send you a bill on a monthly basis for up to 6 months. And if you do not pay it, that final bill will come and it'll say final notice due, or you're going to be sent to collections. And so then they sell it to whoever. Typically theirs is done through Fidelity. And then it goes off to Fidelity. Fidelity will not only call you multiple times a day, they will also send you a bill. If they have your email, they will email you, and then they're going to make sure that they make contact with you so that way they can get paid, because they've paid pennies on the dollar for that debt, but then they want to recoup that money. And if they can get you to pay the full $1,000, even better for them, because Altman more than likely has written that debt off. And so they're recouping it, and that's how they continue to pay their employees and pay out bonuses and things like that. That's how collections work. Yeah.
You mentioned this rapid rescore thing. What is that and when would you use that?
I feel like these days I have to use it a lot. Rapid rescore is if you have someone who, let's just say here, they had a collection account and they paid it, they have a letter of deletion to have it removed, but the creditor says that it can take them up to 60 days to do it. And if that's the only thing that's hurting their credit score, then I'm going to ask them to send me that letter of deletion. I'm going to basically put it in through the company that we pull credit through and request for a rapid rescore. Rapid rescores are not cheap, and you cannot charge a borrower for it. So unless like we're pretty confident that it's going to happen, I'm not doing it. But what they do is they take that letter of deletion, paid in full balance, updated credit card statement, whatever it is that's reporting on the credit, to have that balance updated or have the account removed, to then give them what their credit score should be a lot sooner. So like we're manually forcing it out to where the credit bureaus have the chance to update that score sooner instead of waiting 30, 60 days. because most credit reports are anywhere between 30 to 45 days behind. So it just helps them be able to get them on a path to get approved sooner.
So what is rapid, like how quickly?
Rapid is where it can take, if we do a rush, it says 1 to 2 business days, but realistically, we'll call it 5 business days. And 9 times out of 10, we use like a credit simulator. And so like, it might not come back exactly at that, but it's going to come back pretty close. Anything else?
A random question.
Yeah.
That's not, doesn't have to do with questions, but, what does it mean when someone freezes their credit?
A pain.
I've had people freeze it and because they had, like we've had stuff stolen and like identity, that type of stuff.
So they basically, if you put a freeze on your credit, it just essentially means that you're fraud guarding it. Like no one can, even if someone had stolen your identity, you have to lift the freeze in order for anyone to be able to pull your credit. Like someone in this room had their credit frozen, and then they told me that their credit was unfrozen, but it wasn't unfrozen in the amount of time that they told me that it was. And so then I just had to keep checking. But in the process of that, I also had to pay for several credit reports. So, you know, it's just what happens. But then finally, the freeze was lifted and all checked out. His name just happens to be Adam.
Does it actually work?
I would recommend you
Yeah.
freeze your credit, because
It's like
basically.
not in a place where you're gonna buy anything.
Correct.
Yeah, yeah.
Like, I mean, mine is frozen, my wife's is frozen, like I have basically put the freeze on my kids and lifted the freeze, put it back on there and lifted it because I want to see like they get mail because we've added them as authorized users. So like they get credit card mailings. And so like to me, that is helpful for me to know, like, is anyone else trying to use their identity or anything like that? Just because like once it's out there, it's out there. And you can't really control that. So like we put the freeze on there and we lift the freeze. So there's those sorts of things. So like putting the freeze on there, it's not a bad thing. Some people just do it as like a safety net. Some people do it because they've been burned. But it's not a bad thing to do. But like most of the time, like you have to pay to do it.
Oh.
Is it hard to get it unfrozen?
It's very easy.
It's very easy.
Yeah.
So Adam shook his head no. So it depends on who you freeze it with. If you freeze it directly with the bureaus, it is free. And then like there's a few other sites, but most Americans either use MyFICO or they use like Credit Karma. And if you do freeze them through those, that you typically have to pay.
I had a buyer that maybe he's lying now that I think back to it, but it took him like 2 weeks to unfreeze his credit, he said.
No, because like, I mean, he literally did it and
You can do it in seconds. You just literally go to like Experian, Equifax, or TransUnion. They all have their own website. You make your own account. So as long as you know your login, you can literally, like, I can do it in, no joke, 10 seconds. I can unfreeze my credit.
Oh.
Yeah.
So-
I recommend doing that.
100%.
yeah.
It's just gonna prevent mortgage fraud. Like my friend, he literally just had someone open student loans in his name, and he didn't have his credits, so they were able to pull his credit, do that. I dated a girl, she literally had someone do mortgage fraud in her name, so all these things had their credit been frozen, there would have been no path for them to do that, but since their credit was open, if anybody gets your social security number, they could literally take out debt in your name, and then now you gotta try to fight it. So now it's just gonna be a huge pain in your butt. When all you gotta do is have your credit frozen, like I said, it takes 2 seconds to unfreeze it. Whenever you're going to get a car loan or a mortgage or a credit card, you just unfreeze it and it's easy peasy.
Can you still use your credit card while?
Oh, yeah. Like you lived your life normal. You just can't take out any new debt, but it also will alert you if someone has tried to use, or like if someone, like, we'll just use Caitlin. If someone literally went to, Progressive to try to buy a car and they used all of her information, and if she had her credit frozen, 9 times out of 10, like in that situation, she's going to get a phone call, she'll get a text message and an email saying like, hey, your credit was just tried to someone just tried to run your credit. Are you in the market for doing X, Y, and Z? She could say no, or yes, that was me, whatever the case might be. So like, but she sometimes, especially like with older people, they forget that their credit is frozen. And you don't know on my side until you've gone to pull their credit and it's just like, oh wait, you can't do that. And they're just like, oh yeah, I did that so long ago. And it's like, yeah, not a big deal, but it is a good thing to do. We'll move to like bankruptcies and judgments. I look at them depending on where you are at in life as like your saving grace or your roadblock. If you are at a place to where it makes sense to hit the reset button, file bankruptcy. This is the only time I can say that freely. Like that's what you do. So as a mortgage person, we can never advise a client legally to file bankruptcy, but we can also tell them and say, hey, you need to have conversations with someone else to see like basically what makes the most sense for you. And sometimes it's because people are young and dumb. Sometimes it is because they have, I've had clients who've had like crazy medical things like cancer and all sorts of things like, and insurance just doesn't cover it and to how it should cover it, but they've still had to have treatments and everything else. And if that is the case, and if you have no ability to ever pay that back, even though like we don't have to consider medical stuff on our side, it's still impacting their credit. Like it makes sense to file bankruptcy. Or like if a lot of businesses do it every single day. If they have gone out of business or just like they are robbing Peter to pay Paul in order to say that, hey, like we still can be a corporation, they file bankruptcy. They do. So that's from my perspective. If you have the chance to hit the reset button, hit it as long as it makes sense for you. But how is it going to impact your credit? It will. I always say, like, don't listen to bankruptcy attorneys on what to do afterwards because they tell them to basically take out all the credit that comes to them and like it's a candy machine and it's not. They would start over from the basics of getting basically 2 to 4 accounts, having a healthy balance, a relationship with them, keeping balances low, those sorts of things in order to say that they hit the reset button and to be able to start fresh. Sometimes like if you have a car loan and you're filing Chapter 7, keep your car unless your car is a POS and you need to get rid of it. If you don't need to get rid of it, keep it. But then also you need to make sure that you reaffirm on it and then the creditor is actually reporting it to the collection agencies. So then that way you are automatically, you file bankruptcy, but you're not starting over. You actually have great payment history. You have something that is already helping you get credit. Those sorts of things. Judgments, or we'll put it this way. If you file Chapter 7, what does it look like for you on buying? 2 years for FHA from your discharge date, 3 years for USDA and conventional. VA, it's the exception rule, but typically it can fall between that 2 to 3 year gap. Chapter 11 and Chapter 13 are bigger, and that's basically a 5 to 7 year wait period. So, but most of the time, if you're filing Chapter 11 or Chapter 13, whatever you have, like it's big. So like you've had a business, you've multiple homes and those sorts of things. And so like you're waiting in order to offset that, but it doesn't mean that your life is over. Judgments are child support, tax liens, those sorts of things that can report to credit. I just had one, but it was not reporting on credit for him until he made a phone call. And then I got a notification this morning because he made the phone call, but he unfortunately owes $69,711.28 in taxes. And he forgot about it. But I wouldn't have known that like from the beginning because it wasn't on his credit, but now it is because he called and I got the notification that, hey, like so-and-so's credit score changed and it was updated. So they can impact it. if it is something like that, those have to be like corrected, but also if they are corrected, you can ask them to remove it, especially if you know that you were trying for an FHA, like, well, a government-backed loan. They want to make sure that, like, according to the guidelines, rules, and regulations that they have to follow, that they help you out, that they will remove them from your credit. Same way that, like, if you have military, so VA people, if they have ever received overpayment or if they've taken out a military star credit card, which is a credit card that's primarily for them to use on base, and if they didn't pay it back, then those will be removed from their credit because they don't want it to hurt them. But in the meantime, until they do pay it, it's going to hurt. So like they go on there as collections, and it'll also say a judgment for them.
Removed from their credit. Like, does that mean they don't owe it anymore?
No. They pay it, and
Okay.
then it gets removed.
Oh, okay.
So like in that case, like if I went to go, yes,
Okay.
yeah, they want to make sure that they have been able to be repaid, and then once they are, then it's gone. And then like, oh, I'll put it this way. I don't like the golden rule method on here, but I do believe that like if you take care of your credit, it's like anything, it's like your body, okay? So if you put bad stuff in it, bad things happen. If you put good things in it, good things happen. Your credit is truly the same way. Like I learned these things at an early enough age, but like as we're human, like I've still have made mistakes. Like you just do. And even for someone who's worked in the industry, like I remember when I first started working at US Bank and I made pennies, it felt like. But like I was late on my car payment 2 times. And instead of like calling my mom to say like, hey, I'm gonna be late on my car payment, I was just like, no, I'm just gonna figure this out. But then it took me 3 years to like get that to bounce back and change things. Like, but that was also 13 years ago. But like it, you do things and like you just don't think that sometimes like they hurt you or impact you, and they do. Like they just do. I mean, and even, but when I got my car, I was a teacher, and I just knew that even then, my pay at US Bank was slightly higher than my teacher's pay, but it still wasn't enough to justify my car payment and like my day-to-day lifestyle. So like it's just it's hard to do those things, but if you can figure it out, like just do them. And that's what I mean by like taking care of your credit is truly like taking care of your body. Uh, the other like big thing that I'll tell you guys is that when you are talking to a client, every client can quickly, I shouldn't say every client can, but most clients, if they have a score under a 700, can probably make their score that or higher with the right guidance. They just can. So like if they have money saved, does it make sense sometimes to do a rapid rescore plan of action of, especially like if you call and say, hey, like this house can only go conventional. Well, I'm just going to come back to you and say, Bree, well then what are your thoughts, or what's your buyer willing to do to help us make it happen? Like, do we need to look into down payment assistance in order to help make sure that their credit score goes up to go conventionally using that? Or because like we have to use part of their money to pay down on a credit card or whatever the case might be, or like they fall in love with a house and they're just like, this is the one, but I've given them a path and they still haven't done it quickly. Well, now we have to pivot, and they can do it quickly, but it's going to cost us both something. If I have to pay for a rapid rescore, which can range between, depending on how many accounts it is, like from $300 up to $1,200, then they need to also be willing to have some skin in the game and pay whatever would need to be paid. But if they do it correctly, it does work. I had a guy who's under contract on a house in Denison when he came to me, he applied, I want to say like the first week of July. He was at a 573. He paid 2 accounts. The one got deleted. We just needed an updated balance letter on the other one, but it took him like, I don't know, 2-3 weeks to be able to do it between pays. But he went from there to now he's at a 668. It makes a difference. And yeah, just from having the one removed and the balance updated. So like it can quickly be done, but you have to, like, you'll be able to know like if your buyer is committed. Same way, like if we put together a plan of action to help someone build their credit, if they follow up and if they say, hey, like I've done this, I've done that, like we have someone right now. The moment that she paid her stuff, she was like, hey, like I paid this, how fast can my credit go up? Well, not instantly, but you get me what I need, and then we can do that. But like she was on it, and like, but you'll be able to tell that. But I can also give you feedback, or Adam can, whoever, and say, hey, have this consultation. This is their plan of action, and they don't really seem that motivated. And then I'm just going to kind of put that out there with you, and whether you have them get a second opinion or we do a conference call, whatever, it helps make things a little smoother. So then that way you don't show them something, they fall in love with it, and then you just can't do anything until whatever has been fixed. Does anyone have additional questions about anything?
I got some child support questions.
You already asked me this, but go for it.
So, how long? Like, is there an amount that someone needs to pay their child support down to, or a way that, like, when does it hold someone back and when doesn't it?
So the only way it's going to hold them back is if they are behind. And if they are behind on their child support, then you need to do 1 to 2 things. Whatever is reporting on credit, if depends on how bad it's hurting their score, because they do update it and put it on credit. So that's one factor. The other factor is that if they are behind, we would ask them for their updated shared parenting plan agreement or the child support order to be able to make sure that we're factoring whatever the monthly amount is supposed to be, and then whatever they're paying on like the back amount that's owed. And sometimes like it can be fine and we can move forward instantly, or sometimes they have to at least have the whatever is behind paid off to make sure that that amount is not being factored in.
So, if the child is a full grown man now and they were behind because they were like, not out in the free world for a little while, and they went to college, and so
I feel like I'm on a
they,
TV show.
huh?
I said I feel like I'm on a TV show, but keep going.
Yeah, no. So they went to college, and the child is, grown now, but while they're in college, they couldn't make the payments, of course. So when it's behind like that, but they're current on the agreement that they have, does that matter? Or is it just the fact that it's behind in general is going to hurt them?
From that case, like from that situation, I would tell that person to go back to. I'm trying to determine how like realistic I want to be with you about this. Okay, we'll put it this way: if both parents are willing to have the amount adjusted, so like a new order put into place, then it helps them a lot quicker. But I will also be very open with you, and I will tell you that my father still owes behind like back child support. He owes $34,000 now for me, and he owes a total of 63,000 for my brother. And it has affected him our whole lives. I am 35, my brother is 33, and I'm not changing it. I'm not allowing my mom to change it because he still pays it monthly and it goes into accounts for our kids. So your person can do whatever they want to, but it does take both parties to make that agreement. And I'm
I mean,
not,
it's less than, so it's like it's not like it's like a crazy number, and he's making the payments on it. It's like he's up to date on the payments and everything. It's just, while he was in college, of course, he can't physically make those payments. So he
okay,
was behind.
so how much did you say that it is?
It's like, let's say it's somewhere between like six to 7,000 now. Like
Okay. So then if his current active order shows, we'll call it $400 a month is what was supposed to be paid, and then he's paying an additional $150 towards what's behind. As long as that is more than what that is a total monthly like installment amount, that is what more than what's reporting on credit, then it helps him out. Where it doesn't help him out is that if there's not anything that's being accounted for what's behind on the updated order, or if we can also try to do what's called like you can use a 5% of the balance. So I would take this $400 number, and then this you call it, we'll just say $7,000. I'm going to take 5% of that $7,000 balance, and then I'm going to tack that on like as a monthly payment to him. And then if that still gives him a path forward with his buying power or his loan request, then he would be okay. But it doesn't mean that it's the end of the world.
So it's probably just better to just pay it off because it
Correct.
sounds like it's going to work against his debt to income and everything. The credit
Yes,
score
it
is,
can.
but
No, I said it can, but go ahead. You said his credit score is what?
immaculate.
So then that tells me that it's not on credit.
Yeah, I don't know, but I know like when he tried to get approved before, it came up,
It would come up
but it
if
was a
he,
lot more back then. It was like 20,000 back then, and he's paid it down.
well, then just have him call me. I think there's a way around this. That's what I think.
He's already called you.
Well, we didn't talk about that. We only talked about a car.
Yeah, no, he's supposed to talk to you about that.
Okay. Well, he didn't bring that
Yeah,
up,
that's
but it's
probably why.
okay.
Because that's the biggest thing. The car is like, yeah, refinancing the car, that's a big question too. But
We already addressed it. He did it last week.
when you do like refinance a car, is there any time that you don't want to like refinance a car? Like if I
If
have a
it's not
client that
going to benefit you. So if you have like let's just talk about this. So like if you have a car and it's being financed, let's just say here when you got the car, you had an interest rate because your credit wasn't great, and you have an interest rate of 7, 8, 9%. Okay. Now you have this amazing credit score, and your bank is offering, like in this guy's situation, they were offering, it was like a 3.5% rate. Yes, you want to refinance that. However, you're lowering your interest rate, so that's already going to impact the monthly payment. He does not need to stretch out the term for that car loan. If anything, he would reduce it and reduce it to however it's going to benefit him the most. So, like from that comparison, yes, those things are going to help him or help anyone, but you don't. If you need to refinance a car to stretch out the term, or you're going to end up paying more for the car, and depending on how new the vehicle is, that's where like it just doesn't always make sense because you don't want to then end up basically having a ton of negative equity if you had to go trade that car in. That's my
yeah,
take on it.
else at that, I think that would happen to him if he tried to refinance his, because I like it's like a BMW and those depreciate so fast, where it's like you probably owe more than what the car is worth right now.
Probably. So yeah, that's how you have to look at that. Um, any other questions?
I do like past
I-
foreclosure, like repossessions and stuff work.
I had
Past
a question.
foreclosures. Oh, go ahead, Paulette, and then I'll come back to you, Zarice.
I'm so sorry. I wanted to kind of take a step back on change of life events, like when people have hardships. There's actual hardship programs with creditors that they do, like they'll drop it down to zero, you make lower payments, and then they close the account at the end of the payoff. Is it better to pay them off as soon as possible, or just go ahead and let it ride and make those payments, say if the credit was long term? Like the credit card was held for, say, 8 years. Is it better to pay it off or just let it ride at the lower payments?
It's always better to, because at that stage, like after a hardship, whatever you are able to do, and the sooner you are able to do it, that's the best way to do it. A lot of times people take advantage of like debt relief programs or hardship programs, and 9 times out of 10 with like the right guidance from like someone like myself or like a local credit union, they could do a lot of these things and not be charged the fees for it. Like if I could charge for credit reviews, maybe I would, but like I can't. And so, but what I can tell someone to do, whether that it takes them a year, 2 years, or 5 years, is it's very similar, and I'm going to give them that information for free. And from there, I can even give them an action plan and tell them how to address it and take care of certain things. I will help them put together a proper budget to be able to do these, especially if they're in a position that they bounce back from. And you're not being charged all the fees and waiting for whoever to call and make a settlement on these accounts for them. And because every single time that payment or that account, especially if it's like a debt relief program, it's just sitting there and basically just going another month delinquent, and there's no payment because they don't make any payments until they receive what they need. And so it just really depends on that person's situation. But I don't advise most of those programs because they can, with connection with the right people, they can do it themselves.
Right. Well, this particular person had it with their credit cards. So like they contacted the creditors themselves and were set up on a hardship program. Not everybody knows that exists, but
Right.
that's something that can be done.
So then, okay, so from that perspective, let's just say here, if they said, hey, we're going to let this go for 8 years, but if they are in a financial position that they can take care of it, we'll say within 2 years, then take care of it. Because the longer that you let it ride out, it's reporting, however, so it's going to report, they're not updating it as a brand new account. And so like that's what I mean, that you don't want it to report delinquent every single month, especially like from the get-go, if they don't have enough funds to bring the account current, because they don't automatically do that for them either. But if they owe $2,000 but $400 of that is behind, then they would need to see if bringing the account current helps them. Closing the account out is fine because of the damage that was already done, and the creditor is going to do that anyhow. But then I would tell them the faster that they can get that debt to zero, the better.
Okay.
I hope that answers it. And then Zarice, you had asked about repos and things like that. Repos really do affect your credit for up to basically 24 to 36 months. Especially you have to look at what other positive factors that someone has reporting on their credit. And if they don't have any, it's really going to take that full 36 months. For a mortgage purpose, it's very hard to approve that person if that repo has been within the last 24 months without having a ton of positive other factors, or without a large down payment or something to guarantee like an approval. But you are going to see that can affect someone's score anywhere between a good 70 to 100 points. But it can bounce back over time if they can figure it out. Does that answer you?
Yeah, but what about like a foreclosure? Because I had someone who was in like the middle of a transaction and the listing side was basically like they couldn't get like a septic repaired, so they were basically ill advised, I think, by an attorney or something to just like let the house foreclose, and they're like, yeah, it's not going to affect you that much.
Oh, but it will.
Yeah, like it doesn't make any sense. Like it's going to affect you a lot. But
Well, I mean, number one, they wouldn't be able to buy a house. What is that for 7 years? So yeah, they can't buy a house for 7 years if they let a property foreclose. And then it's also going to go on it'll go on the credit. However, it's going to go to auction. The goal would be to have whatever the remaining balance is to be paid off, and that's going to help satisfy the debt. So any for like attorney fees, the remaining balance, all of that is fine and dandy, but that's the goal for the bank to at least break even if they can. But it's going to hurt that person's credit for really 7 years, and they also wouldn't be able to buy a house. It can hurt their credit a little bit longer, just depending on how well or how bad that they handled their other debts. So no, I don't advise that at all, because it's not going to help them. It will hurt bad.
all right, I got one more question.
Go for it.
All right, so what if someone claims that they have like a low credit score? I don't know what low is considered. Let's say like 580 or 560 or something like that. I don't know. And but they have like $30,000.
So as long as that person does not have any derogatory debt, any non-medical derogatory debt within the last 12 months, and if they can put 10% down, and if they have at least 6 months of reserve, so future savings, then they can still buy a house. So life happens. It can literally happen to any of us. If it hasn't happened to you, I mean, it can easily happen just because that's life. So, but it doesn't mean that it's impossible to buy a house. So as long as if they have the money, then it's doable. But again, keep in mind that you do not want any derogatories on their credit that are non-medical within the last 12 months. Because if they do, then they won't be able to do it. And that's if they have a score of 579, 500 to 579.
Yeah.
Cool. Anyone else? All right. Well, thanks everyone. If you need us, you know how to get a hold of us. And if you don't, my contact information is on that sheet that I put in the thing. But thank you. And thanks for my in-house class attendance.
Thank you, Chris.
Oh, you're so welcome, Zeman.